afternoon, traders, and welcome to this week's Forex Focus, the show where we look at the opportunities that could be setting up in the FX markets for the week ahead. And in this week's show, we've got a lot to talk about because it looks like the US dollar is going to continue its rally against most of the majors. So we're going to start off by looking at a few of the trades that we took last week, and then we'll move on to the opportunities that could be setting up in the pound dollar, the euro dollar, the Aussie dollar, and the New Zealand dollar either next week or the week after. Okay, so we'll start off by looking at the opportunities that we've taken this week. The first one was the euro pound, which I think we spoke about last week. Ultimately, we said we were looking to take the euro pound short. As we can see, we're on a big downtrend here, and it's really accelerated through the end of last year and the beginning of this year. We then had a little bit of a pullback towards the end of January and the beginning of February, and last week the market then started to make its move and make its a second attempt at a descent. So ultimately what we did was we were looking at it from the 4-hour perspective, okay, and we had this support line set in over here from the 23rd of January. As you can see here, the market's come down to this level down at 0.7404. It then pulled back a little bit. It then came down again, and it sort of was playing with this level. Now, we didn't get in on an initial break of this particular level here. We got in on the second attempt over here. So the market broke initially. It showed us that it wanted to go lower. And then we waited for the pullback for the market to prove that it wanted to hold below that level. And that's ultimately what we got here on, not on this candle, sorry, on this candle over, where are we? On this candle over here. Okay, so the market then broke through there. We had our stop above the highs over here at 0.7604, and we are targeting the lows down here at 0.7243, which is a previous, if I go and zoom into this chart very quickly on the weekly, excuse me, so I've still got a cold here. But if we look into this chart over here and we cast our eyes to the left, we can see that this is a previous level of resistance. As you can see here, it's quite a large level of resistance. So if we look then to the current day, we can see the market hasn't been back to this price since then, which is a good sort of 6, 7, 8 years ago now. So it's a very big level. We do believe the market's going to get to that level eventually. What it does from that level, we don't know. So that is our initial target. We'll then take a look at what the market does when it reaches this level to decide whether we want to take off, all of the trade, part of it, and just see how we want to manage it. But that's our initial target there in any case. The second opportunity that we looked at this week was the Euro New Zealand. So the Euro New Zealand is also in a downtrend, not quite as pronounced as the Euro Pound, but a downtrend all the same. And what we had here was the market pulling back to a previous level of support. So if I put in that support line there, you can see the market broke through this level. It then pulled back to that level, and that's ultimately where we look to take our sell trade from. We then zoomed into the shorter time frame. So if you look here on the 60-minute chart, we then zoomed into this time frame in here, and we put in a trend line from which we were going to take we took our break. We didn't take the initial break of the trend line. Again, we wanted to make sure that the market gave us the confirmation. So we actually ended up getting in down at this level at the 51.86. Our stop is above the highs over here at 54.94. So quite a hefty stop in there. But our target is, if we zoom out here, we're looking for the market to come down to this sort of level at the 1.4870 level. And if it can get down there quite easily, we'll then be looking for another 100 pips towards 1.4776. So as you can see, quite a large stop in there, but we're also going for a large target. And as you know, the distance between your entry and your stop really shouldn't make a difference, because you just adjust your account size, or you adjust your stake size, your position, in order to be able to take the bigger stop loss. And what you never want to do is find yourself in a position where you're taking you've got a constant position size regardless of how large your stop loss is, because that means that there's no consistency in your trading, and it means that there'll be some trades that you take which are you know, sort of giving you a 1% risk, and there'll be other trades which could be giving you more of a 4, 5, 6, 7, you know, Lord forbid, 10% risk. So don't get into the habit of using constant position sizes. That's what rookie traders do. If you want to make money, you need to really take the time to calculate your risk for each individual trade. All right. So they're the trades that we're currently in. Now we will look at the trades that could be setting up for the week ahead. We'll start off with the Australian dollar. So if we take a look at the daily charts on the Aussie dollar here, we can see it's in a big downtrend. All right. The market, I mean, if we zoom out a little bit, you can see that it's even going even further back. So we've come all the way up from the lofty heights at the beginning of last year. So 2013, we can see we've come up from the one spot, or come down from the one spot 0610, and now we are all the way down here at towards the 76 level. So it's a big downtrend. We definitely want to be short the Aussie dollar. We believe the dollar strength is going to continue for the next year at the very least. And ultimately, this is one that we're looking to take short. At the moment, it isn't as great a setup as some of the other pairs I'm going to show you. So the only real entry that we have is either through the lows here, or, and what we would prefer, is to wait for the market to come back to this sort of level here, to come back to this trend line, and then give us some sort of a price action on this trend line, whether it be a bearish engulfing candle, a shooting star, whatever, we don't mind. But as long as we get some sort of price action at this level here, then we will be looking to take it short. So at the moment, it's not the best setup. There are others, but it's definitely something that's on our watch list. It's on our radar, and we're going to keep an eye on it. We've then got the euro yen. Now the euro yen is something we are looking to take short. In fact, we've got an order in. I think we're probably short already. Yep, I'd imagine so. We had an order in at 13388. Ultimately, looking at this, you can see that the market is moving down. It then has found some resistance at this previous level of support here. Okay, so previous level of support becomes resistance. We're not looking for a whole lot on this trade because, as we said on with the rest of the yen pairs, we're all coming up to quite major levels that could cause us some issues. So we're not looking for a whole lot. Initially, we're just looking for the market to come down to the lows here at 13020. As you can see, it's about a 1-to-1 on that trade there. Then we will see how the market reacts when it gets to that level. If we get a bounce, we'll take off some. If it smashes through, then we'll probably hold and see if we can get down towards the lows on the weekly. The previous level of resistance becomes support down towards the 123.50. And as we know, the yen pairs can move quite quickly. So that's not a target that is, you know, completely way off. It is definitely something that's within our sights. So it represents a good risk reward trade for us there. So as I said, we're probably actually already in this now, and we'll let you know how things go. The only thing that we need to be careful of, okay, going into the next weeks, and this is, if this is probably going to be our last euro trade that we will take going into next week, is we've got this whole issue with Greece. Okay, the first proposal that they put through yesterday was rejected by Germany. So that does still represent some risk for the euro, and that's something we really need to be careful of, because ultimately, if they eventually agree something, then we potentially could see a bit of a spike up in the euro, which would obviously be bad for all of these positions right here. So that's the risk. That's the only risk on the table at the moment as far as the euro is concerned. So be careful if you're taking too many trades in this one particular currency here. And we're now in 3 off the back of this euro yen one just triggering. So we're now in 3 short euro positions. This is something that we will manage very carefully. We've got good news in the sense that we're already in the money of the euro New Zealand, euro pound just about. So we do have something to play with. But if we're going into next week, please be careful if you're looking to take any euro positions, because there is that element of risk on the table there. Euro dollar is also something that we're looking at. Much like the Aussie dollar, though, it's quite difficult to pick an entry for this particular pair here. We were initially looking at the 1.1248 level, just because that is the support level that it's been holding over the past couple of weeks. But obviously, once we get below there, we've then got to look at the initial low. So it's quite a difficult one. There are better trades on the table, although we certainly want to be short the euro at the moment. As I said, at the moment, we're finding it a little bit difficult to try and pick the best entry for this. But taking into account that we're now in 3 euro trades, I'm probably just going to leave this one alone. Then we'll take a look at the pound Aussie. The pound Aussie broke out, as you remember, we were talking about this a few weeks ago on this video here. The pound Aussie broke out of this resistance here at 1.9307. It's then moved away from there. What we're waiting for now is a second opportunity to get long by waiting for the market to come back to this particular support level at 1.9318. If it can come back to this level here, then we will look to get long. At the moment, in terms of any other trades, there's really nothing on the table for us at this moment in time. But we're going to wait, keep an eye on this, and see what it does in the week or weeks ahead. The pound dollar is something that we've got an order in on the pound dollar. We're looking to get short below 1.5340. And the reason for that is obviously we've got if we look at the daily here, zoom into the daily, big downtrend, big, huge downtrend there. As you can see, the market is, coming back, bouncing away from this trend line. It did break that trend line, but we are provided with some resistance from this previous level of resistance over previous level of support, which has become resistance, which is what the market is reacting to at the moment. We're not saying that it can't pull back anymore. Potentially it could pull back to this resistance level over here, but it is something we have an order in at the moment at 15340. It didn't trigger earlier, came within a pip of triggering. It hasn't triggered yet, but we are looking to take this short, which is on a break of this counter trend line here on the 4-hour chart in the direction of the major trend on the daily chart. And as you can see, you've got the similar price action here on the hourly. And to be honest with you, we quite like to see this. We don't like to get straight in as soon as the market reconvenes its move in the direction of the major trend, because we know that a lot of time there will be a little bit of a pullback. So we quite like to see this, and then we'll get in on a break of this consolidation area over here. Moving swiftly on, we then have the New Zealand yen, which is at a previous level of support on the daily, which is now acting as resistance. It's also broken the trend line here. This is something that actually I did want to talk to you about. It's broken the trend line, but it hasn't really broken it. It's broken it because time has elapsed, right? The market hasn't really gone anywhere. And these are the sorts of moves that you really need to be careful of. You don't want to get into trades where it's broken a particular trend line just because it's gone sideways. It needs to break the trend line with the momentum. It needs to break it by moving through it as opposed to moving across it. Does that make sense? But anyway, this is something that we are keeping an eye on. If we get a sort of like a 1, 2, 3 reversal around this level here, then we'll certainly look to take it short. Initial eyes will be at the 84.09 level. And if we can get down there, if it approaches it with some venom, then potentially we can look at the 81.32. But really we have to wait to see how the market gets to that level before we can decide how we're going to manage it. So if it kind of meanders up to it, then we'll just take our profits, assuming we're in the position, obviously. But if it, really motors up to it like a train, then we might have the momentum there to take us through. New Zealand dollar, also like the rest of the dollar pairs, as you can see, the rest of the majors, it's in a downtrend here. The market is moving from the top left hand of the screen down to the bottom right, which obviously means we are the majority of the market forces think this is going to go lower. We've had a little bit of a pullback. We've been talking about this over the past few videos, past few episodes. We've been talking about the fact that we've been waiting for the New Zealand dollar to pull back. And this is, well, not just the New Zealand dollar, all of the rest of the dollar pairs to pull back. And that's what it's done. So now we're getting an abundance of opportunities here. It's sort of like waiting for buses. You can have no trades for weeks on end, and then suddenly they all turn up. And that's exactly what we've got here. But you need to make sure, like with the euro pairs, you're managing your risks. So you're not getting into trades where you're not getting into too many trades that are ultimately the same trade. So if we're in the pound dollar trade, if we're in the Aussie dollar trade, you probably don't want to be in the New Zealand dollar as well, because if there's $1 move, it's going to affect all of your trades there. Okay. But these are just giving you ideas of setups that we're looking at for the week or the weeks ahead. And then finally, we've got the dollar CAD, which is in a nice triangle now, as you can see. The daily chart is definitely upwards. Zoom into the daily chart here. As you can see, the daily chart is moving upwards. We had a nice momentum move over here, followed by a bit of a reversal or pullback. And that pullback has then formed a base, as we can see on the 4-hour chart. That pullback has formed a base here at the 1.2348 level. We've then got this triangle that's forming here. What we want is we want to see this triangle broken. But again, as I said to you just now, it needs to be broken by the market moving through the level as opposed to across the level. If it just breaks it because time has elapsed and we've got, you know, however many 4-hour bars into the future and it's just gone through, that isn't a break of a level. A break of a level is when the market moves through it. Okay. So that about wraps it up for this week's Forex Focus. I hope you've enjoyed watching. I hope you found some valuable ideas in that analysis there. As I said to you earlier on in the video, really it's about waiting for the markets to come to you, waiting for the right opportunities. There are an abundance of opportunities that are setting up for the week ahead. Make sure you don't get caught by taking too many of them in correlated pairs. All right, so that goes for the euro and for the dollar. But anyway, thank you very much for watching this week. I hope you've enjoyed it. If you liked it, please subscribe to our channel below. Please give us a thumbs up. And we'll look forward to talking to you on the next Forex Focus.